Welcome to Share Talk, the only podcast where investors come first.
Today we have Sapan Ghai from Sovereign Metals, which is listed on the AIM market. Hi Sapan, how are you?
Hi Rob, yeah, very well, thanks. How are you?
Not too bad, thanks. Firstly, Sovereign Metals, which is listed on the ASX, commenced trading on the AIM platform in London last December. Could you explain what the rationale was behind that?
Yeah, sure, Rob. I think to understand the rationale, it'd be worthwhile just giving a bit of background to Sovereign. So the company's been in Malawi since 2012, initially exploring for graphite projects, and in fact converting some of those projects to a JORC resource. The most advanced of those projects was or is the Malangundi graphite project, which some of the listeners may be aware of. And Sovereign completed a pre-feasibility study on Malangundi in late 2018. And look, it's a very good standalone graphite project, and you can learn more about it on our website. But look, as part of that study, the company completed some bulk test work and produced some graphite on site. And a couple of our guys spotted that there was Rutal registering in the tailings to that project. So we started looking at, well, why is that the case? And, cutting a long story short, fast forward 3 years to today, and following a bunch of drill hole reassaying, a bunch of lab test work, and a major drilling campaign over the last few years, what we sit on now is now what we term the largest undeveloped rutile deposit in the world, and that's the project that we call Cassia. So look, once we knew what we had our hands on, we started looking at the investor appetite for Rutal and for Africa and for and whether we needed to kind of let new investors into Sovereign. So it only made sense to open the doors to UK investors who firstly have exposure to other mineral sands companies here, like Kenmare, like Base Resources, like Blue Jay Mining, who a lot of people will be familiar with. There's a lot of appetite for African mining investment opportunities here in the UK. There's not many mining projects in and around London, so you have to look elsewhere to find those, right? So. And then on top of that, we wanted to be on a platform that understood ESG a lot better. And I'd say London specifically is probably one of the most advanced, or has one of the most advanced understandings of the importance of ESG for future investments. And that's quite important to us because we have done and continue to do work to confirm that using natural rutile, which is what we have as a source of titanium over other major sources, such as ilmenite, could potentially save substantial carbon emissions.
Okay, I mean, you covered a little bit of what rutile can be used for there. Can you expand it a bit further for investors that don't understand it?
Yeah, look, I do get that rutile is, sounds like a bit of an esoteric commodity, but all it is it's the geological term for titanium dioxide. So rutile is basically a major source of titanium. Titanium comes in two main sources. We don't mine it as a metal as you would with gold. You mine it in its kind of compound forms. So the biggest source of titanium is ilmenite, which many will be familiar with, and that contains about 50% TiO2 and sells for about $200 a ton today. And it makes up about 6.2 million tons of titanium feedstock supply a year. Rutile contains over 95% TiO2 or titanium dioxide and sells for, substantially more at around $1,350 a ton today. But due to its massive scarcity, it only really makes up about 500,000 tons of titanium feedstock supply. So really what I'm getting at is when I say rutile, I want the listeners to hear titanium and all the forms titanium can take. So you asked about the applications. I think we're all familiar with titanium metal, which is, lightweight but very strong. So is used in all sorts of aerospace, medical, clean tech, military, and other, cutting edge technological uses. But actually, the bulk of titanium feedstock is used in the pigments market. About 58% of rutile supply actually ends up in the pigments market. So applications of titanium in its titanium dioxide form, which is essentially what the pigment is made from, they include, that form's included in paints, plastics, paper, pharmaceuticals, even sunscreen, toothpaste. So in everyday form, we see titanium without actually knowing it. For example, until laws changed in the 1920s, I think we'll all remember that most commercial paint manufacturers were using highly toxic white lead as a whitener in the paints, and then obviously that moved across, and now titanium dioxide is the most common pigment used in and is the basis for most paint colors today. And then rutile specifically has another use. Actually, about a third of rutile produced ends up in the welding industry as a form of flux, which is important because the welding industry is huge, right? As long as we're building, as long as we're constructing, manufacturing, then we need welding, and therefore we need rutile.
Okay, good. I think that's a good explanation. As you say, it's multiple markets that you can aim at. Let's go back to December then. In the RNS, you announced that you'd completed an initial scoping study, but talk about an updated scoping study this year. Do you know what? Can you tell us what progress has been made with this?
Yeah, so Rob, we completed an initial scoping study back in December last year, and it got us really excited about what the potential of Cassia could really be. Just to touch on key highlights from that scoping study, we looked at, okay, we've got this resource at Cassia. If we were to mine it for 25 years and have an annual throughput of about 12 million tons of material into the plant, what are we looking at? And we saw that we could produce around 120,000 tons of rutile and about 80,000 tons of a graphite byproduct. And what that all basically culminated in was on a value basis, we're talking an NPV of just that proportion of the project, or that portion of the project, of $861 million US, and an IRR on that of post-tax of 36%, so pretty robust there. And all of that for a total capital cost outlay of $330 million, which sounds a lot, but when you put it into the context of an NPV of almost 0.9 billion, and that capex being paid back within 2.5 years of a 25-year mine life, it's actually a pretty good return. So look, all of those scoping study results were based on a resource which is out now, which covers about 38% of the known mineralized footprint we own. So once we had the scoping study out, we took the decision to start drilling more of that footprint, both within it and outside of it, to understand exactly how vast and how big this mineralized zone is. And that will obviously increase our JORC resource over time. And that JORC resource will obviously feed into an updated scoping study, which we're hoping will be due out mid-year this year. So clearly, drilling, going into a JORC resource, and that resource will be used in informing that new scoping study.
Brilliant. And you also just announced MOU to supply 25,000 tons of natural rutile per year to Haskell. Do you think the current market conditions are recognizing the news update?
Yeah, interesting question. I think we all know markets are a bit choppy, to say the least, at the moment, Rob. But look, the initial reaction across our markets was good. We were up on all exchanges. But look, the MOU really highlighted three things for us. Number one, It's an MOU with Haskell, who are an international distributor, well known in the welding industry. And look, we're delighted to be working with them. They really know their stuff in the welding markets. Two, it validated our product spec, right? You need a certain type of rutile for it to be readily available for the welding market, and Haskell did the work on our product, and they were happy with it, which is a great thumbs up. And then thirdly, and importantly for us, it supports a premium price for our product. So welding rutile sales, welding rutile trades at about a 25% premium over normal rutile sales. So in the spot markets, we were seeing welding rutile being sold in the last quarter up to about $2,200 a ton. And now if you look back at our scoping study, we had a long-term rutile price in there of about $1,200, $1,300 a ton. So you can see that massive premium that our product could support.
And I guess with Haskell getting involved, that opens the door for other MOUs.
Look, I mean, it's a once in a generational find. This is right. There's not many rutile dominant deposits out there. I mean, this is probably, we've said that this is probably the first rutile dominant standalone deposit of its size found in the last kind of 50 years. So it really is something quite special here, and so you can understand that any real players within the titanium feedstock market and all the associated markets with titanium and mineral sands have kept a close eye on us.
Okay. Last question then, Sapan, that I'm going to ask that investors usually want to hear is regards to the timeline. So what do you have coming in the coming months that investors should be looking for?
Yep, lots of good news, hopefully. I think the first cab off the rank in the coming weeks, we're expecting a revised carbon life cycle assessment of the rutile from Cassia. So if you look at our previous announcements, we had done a bit of work around if you were to take a ton of natural rutile and use that in pigment production versus upgrading ilmenite to substitute rutile products or synthetic rutile products and using those in the pigment production, what would be your carbon emissions? And basically what we're looking at, or what that study concluded, was that for every ton of natural rutile used instead of the upgraded forms of the product, you're saving almost 3 tons of carbon dioxide emissions. And that was a nice to have. What we're looking at now, and what this revised life cycle assessment will look at, is, well, if we were to mine a ton of rutile from Cassia the way we've outlaid our parameters in the scoping study, and that was to end up in some everyday use item, what would be the carbon offset of that versus how things are done in the industry right now? So that's quite an interesting piece that's coming out, hopefully in the next few weeks or so. Along with that, and I've touched on it, look, an increase in the JORC resource, and obviously that in itself will be a conclusion of a number of drill results, which we will announce to the market as and when they get signed off. That JORC resource will then feed into the updated scoping study, which I touched upon, and that scoping study we're hoping should be, we're aiming for mid-year this year for that to be out, and obviously that scoping study will then kick off a pre-feasibility study for the rest of the year. So look, continued exploration. I can't sell enough how huge this thing is. And alongside that, potentially more MOUs with future rutile off-takers. So lots of news flow over the coming weeks and months.
It sounds good, and hopefully you'll be talking to us again when you have that news to announce.
Absolutely.
Thank you very much, Sapan, and look forward to talking again.
Brilliant. Thanks, Rob.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.